Critical Man Pictures presents the Forex video training series, Red Belt Trading Fundamental Analysis. If you were to conduct an internet search of Forex plus news, you would return something in the neighborhood of 30 million hits. Information is king when it comes to making successful trades. Price moves because all this information, economic reports, a new central bank chairperson, and interest rate changes. News moves fundamentals, and fundamentals moves currency pairs. If your goal is to make successful trades, and that become a lot easier when you know why the price is moving the way it is. Successful traders weren't born successful. They were taught or they learned. Successful traders don't have missed powers, and they can't see the future. What they can do is see through the blur that is the Forex news and data, pick what's important to traders at the moment, and use it to make the right trading decisions. Market news and information and data is available through a multitude of sources. The internet is the obvious winner, as it provides a wealth of options, the speed of light, directly to your screen, with access from almost anywhere in the world. But don't forget about print media and the good old boob tube sitting in front of your living room. Individual traders will be amazed at the sheer number of currency-specific websites, services, and TV programming available to them. Most of them are free of charge, which you may have to pay for some of the others. The links page on Critical Man will detail just some of the sites that I have found to be useful in sifting through the plethora of economic data. While there are tons of financial news resources out there, some prefer to stick with the big names. These guys provide around-the-clock coverage of the markets with daily updates of the big news that you need to be aware of, such as central bank announcements, economic releases and analysis, etc. Many of these big players have institutional contracts that provide explanations about the current events of the day to the viewing public. Some of them are Reuters, Bloomberg, Wall Street Journal, and MarketWatch.com. If you're looking for immediate access to the movements in the currency markets, don't forget about the big screen in your den or living room. Financial TV networks exist 24 hours a day, 7 days a week, to provide you with up-to-the-minute action on all the world's financial markets. In the U.S., the top dogs are, in random order so I don't get sued, Bloomberg TV, Fox Business, CNBC, MSNBC, and even CNN. You could even throw in a little BBC America in there. Another option for real-time data comes from your trading platform. Many brokers include live news feeds directly into their software to give you easy and immediate access to the news of the currency market. Check your broker for availability of such features, as not all brokers' features are created equal. Wouldn't it be great if you could look at the current month and know exactly about what the Fed is making an interest rate announcement, what rate is forecasted, what rate actually occurs, and what type of impact this has on the currency market? It's all possible with the economic calendar. The good ones let you look at different months and years ahead, let you sort by currency, let you assign your local time zone. 3 p.m. where you are sitting isn't necessarily 3 p.m. where we are sitting, or 3 p.m. where they are sitting. So make use of this time zone feature so that you're ready for the next calendar event. Yes, economic calendars and data reports take place more frequently than most people can keep up with. This data has the potential to move markets in short term, accelerate the movement of currency pairs you might be watching. Lucky for you, most economic news that's important to the Forex traders is scheduled several months in advance. Keep in mind the timeliness of reports that you read. A lot of this stuff has already occurred, and the market has already adjusted prices to take the report into account. If the market has already made its move, you might have to adjust your thinking and current strategy. Keep tabs on just how old this news is, or you'll find yourself yesterday's news. You'll also have to be able to determine whether your news you're dealing with is fact or fiction, rumor or opinion. Economic data rumors do exist, and they can occur minutes to several hours before a scheduled release of data. These rumors can help produce some short-term trader action, and they can sometimes also have a lasting impact on market sentiment. Institutional traders are often rumored to be behind large moves, but it's hard to know the truth with a decentralized market like Spot Forex. There's never a simple way of verifying the truth. Your job as a trader is to create a good trading plan and quickly react to such news about rumors, after they've been proven true or false, of course. Having a well-rounded risk management plan, in this case, could save you some serious moolah. And the final tip, know who is reporting the news. Are we talking analysts or economists? Economists or the owner of the newest Forex blog on the block? Maybe a central bank analyst. The more reading and watching you do of Forex news and media, the more finance and currency professionals you'll be exposed to. Are they offering merely an opinion or stating a fact based on recently released data? The more you know about who is reporting the news, the better off you will be in understanding how accurate the news is. Those who report the news often have their own agenda and have their own strengths and weaknesses. There is no one all-in-all bet the farm formula for success when it comes to predicting how the market will react to data reports or market events, or even why it reacts the way it does. You can draw on the fact that there's usually an initial response, which is usually short-lived, but full of action. Later on comes the second reaction, where traders have had some time to reflect on the implications of the news or report on the currency market. It's at this time when the market decides if the news released went along with existing expectation, and if it reacted accordingly. Was the outcome of the report expected or not? And what does the initial response of the market tell us about the bigger picture? Answering those questions gives us a place to start interpreting the ensuing price action. A consensus expectation, or just consensus, is the relative agreement on upcoming economic or news forecasts. Economic forecasts are made by various leading economists from banks, financial institutions, and from other securities-related entities. Your favorite news personality gets into the mix by surveying her in-house economist and collection of financial sound players on the market. All the forecasts get pooled together and averaged out, and it's these averages that appear on charts and calendars, designating the level of expectation for that report or event. The consensus becomes ground zero. The incoming or actual data is compared against this baseline number. Incoming data normally gets identified in the following manner. As expected, the reported data was close to or at the consensus forecast. Better than expected. The reported data was better than the consensus forecast. Worse than expected. The reported data was worse than the consensus forecast. Whether or not incoming data meets consensus is an important evaluation for determining price action. Just as important is the determination of how much better or worse the actual data is to the consensus forecast. Larger degrees of inaccuracy increase the chance and extent to which price may change once the report is out. However, let's remember that Forex traders are smart and can be ahead of the curve. Well, the good ones anyway. Many currency traders have already priced in consensus expectations into their trading and into the market well before the report is scheduled, let alone released. As the name implies, pricing in refers to traders having a view on the outcome of the event and placing bets on it before the news comes out. The more likely a report is to shift the price, the sooner traders will price in consensus expectations. How can you tell if this is in case with the current market? Well, that's a tough one. You can't always tell, so you have to take it upon yourself to stay on top of what market commentary is saying and what price action is doing before the report gets released. This will give you an idea of how much the market is priced in. A lot can happen before a report is released, so keep your eyes and ears peeled. Market sentiment can improve or get worse before release, so be aware the price can react with or against the trend. There is always the possibility that a data report totally misses expectations, so don't bet the farm away on the expectations of others. When the miss occurs, you'll be sure to see some wonderful price occur. Help yourself out for such an event by anticipating it and all other possible outcomes to happen. Come up with different scenarios and be prepared to react to the market's reaction. Be proactive in this manner, and you will keep ahead of the game. What happens when economic data gets revised? That's just how economies roll. Let's take the non-farm payroll numbers for an example. As stated, this report comes out monthly. Usually included with it are the revisions of the previous month's numbers. We'll assume that the U.S. economy is in a slump and January's NFP figure decreases by 50,000, which is the number of jobs lost. Now it's February, and the NFP is expected to decrease by another 35,000. But the incoming NFP actually decreases by only 12,000, which is totally unexpected. Also, January's revised data appears, and the February report was revised upwards to show only a 20,000 decrease. As a trader, you have to be aware of situations like this when data is revised. Not having known the January data was revised, you might have a negative reaction to the additional 12,000 jobs lost in February. That's still 2 months of decreases in employment, which is not good. However, taking into account the upwardly revised NFP figure for January and the better-than-expected February NFP reading, the market might start to see a turning point. The state of employment now looks totally different when you look at the incoming data and last month's revised data. Be sure not only to determine if the revised data exists, but also note the scale of the revision. Bigger revisions carry more weight when analyzing current data releases. Revisions can help affirm the possibility of trend change or no change at all, so be aware of what's being released.